Hey traders, Nick here. Wanted to recap week ending 5/18. Um, let's start with the Friday. Markets are still open, but I wanted to just give a little overview on that one. Flattish red. Actually, let's call it red, except for the fact that the small caps, which is a basket of 2,000 stocks, is still green. And in fact, so the other indices are a little bit lower. There's hesitation on a whole bunch of mega caps, like Baidu is down 7 or 8% on the COO leaving. Not that it can drag the whole market, but there's been earning reports like Applied Materials, which affect Micron, which affect this. And not to mention that Friday going into a weekend where Chinese and the US are meeting, a lot of traders, professional big money, wants to go flat. So they sell into the close. So we're weakening as the hours goes, another couple of hours to close. So I said it yesterday that maybe some of that is drift lower because of who wants to go along, who wants to bet a lot of money on a binary outcome. We will probably have a headline by Monday. Which way will it go? I don't know. You don't know. So that's the binary, like on-off type of thing where you can do all the homework you want. My inclination is that the body language from the US and the body language from China is that both sides want to play nice. So all they have to do is, if we don't have a bad headline by Monday, we may have a little relief pop. If we have a really good headline by Monday, and by that I mean any hint of, okay, we're on board, we're on track to set a deal, regardless of what it is, I think we have a good rally. So, but having said that, the small caps, that IWM represents it, is in record territory, has met our first target, and can have legs to go higher. So a lottery ticket on a headline, a good headline next week would be to buy like a 165 call or call spread for the next 2 weeks, or a call diagonal or a call calendar if you want specifics. My system is down. I can't open Excel for some reason, so I can't share actual legs, but I will try to write them up in the write-up. I'm still biased long. I booked a lot of profits like I've been preaching. I book and I re-engage. But I keep trading the fundamentals, which are still bullishly weighted. So the week, how did the week turn out? The small caps are the only thing I'm looking at here that is actually positive. Not even fear is positive. Oops, sorry about that. The VXX is one way to look at fear. So the VXX broke down and we noted this would be the target, and look at that, bounced off of that target twice. So is this a rip higher to retest that neckline right there, or what? So fear, even though the markets are flattish red at the end of the day, is not taking advantage of it. The VIX is a lot lower than it was before. So having said that, the S&P is still on track within our price range. In fact, if I show you the SPY, if you remember when we were down here, I posted that there's a potential head and shoulders inverse, head and shoulders, which is a bullish pattern. And I said the technical upside target would be the width of that, which would be this neckline, which has been pivotal. And I also drew that, whoops, in advance. Let's not move it. So here we are. Look, almost tick for tick. There is another leg higher. When, I don't know. It should, the ES, which is the S&P, which is SPX-ish, should go to 2755. That's my hope. And if it gets there, it may trigger this, which should take it to test 2780, 90 plus. Eventually, we should get there short of a bad headline. Fundamentals support it. The only thing that the bears have is the tariff headlines. Without a new negative headline, the bears have nothing to hold. They don't have a good solid thesis to short. Okay, so we are drifting into the close, but we expected it even earlier, like yesterday and the day before, and last week I said it going into an event weekend, we may see a drift lower. So having said that, so what happened this week is mildly red across the board, except for new all-time high for the small caps, and people underplay it. These are 2,000 stocks, and I wish I had a list of them to show you that. And these are, when I say small caps, these are companies up to 5 billion or so in market cap. So they're not like tiny companies. There's another set of them, micro caps, which is the lower companies. So That's a solid statement by fundamentals. This doesn't happen on a whim. Okay, we can see sell-off in Apple because of technical or, too fast, too far, that drag down the Qs. But that doesn't happen in the small caps. We have to have all of them combined to rise, the small caps. So this is the Nasdaq, the triple Qs. Target met. We drew it well before it happened. So now what happens is we may drift lower to test the neck from which we broke out. So the technical lesson would be, I'm speaking technicals because the fundamentals are still the same. They have not changed. Okay, this has been a pivotal point, right? So on the way up and down. And then we noted it as a potential upside, and they broke from it. So they tend to want to test it back. And so we can drift lower and bounce off of it and do this. And if we get to here, that might be another leg higher. Okay, so scenario 1 gets us to scenario 2, and that's that here I'm talking about. I'm going to extend it so we can see it down the line. Okay, not a hard line in the sand. Again, a neckline. Obviously, we broke through it here. So everybody's going to say, oh, we failed to make a new high. Well, we did. Okay, so who are the big guys in here? Here's FANG. That's the bunch of Facebook, Amazon, Netflix, and Google. 2 Google tickers in there. FANG, same story. They're at the neckline. They're testing the neckline on the way down. They have a similar pattern going. Apple, I just showed you Apple. And so if I wanted to include Apple in here, I think I can add it. And you can see it doesn't change. It looks the same. Okay, so we have a few trades that are working well. Obviously, long the IWM we've been. I also shared long IBB and XLV. Those are paying. I'll have more in the write-up. So my strategy stays the same. Now we have a headline. We're waiting for the headline. I have longs for the headline. And I think as soon as we get a relief pop, it's going to be big on these headlines. All right. So the strategy stays the same. When I take a trade, when I share a trade, it may give fast profits, although I don't design it as such, but it may give fast profits. I'm going to share several trades on Honeywell and also CAT. I've shared on CAT, and it's paying, and CAT has another opportunity. Boeing is exploding higher today, maybe even on bad news. So these are tariff stocks. These are industrials. XLI, remember we just traded the XLI with big profits. The setup's still there. I trimmed mine, but I can still get back into it. As soon as we get relief from this big cloud, the tariff headline, it's going to release the energy in these stocks. So it's harder to short than to go long in this day and age. I am biased long and I'm staying long. As far as next week, I looked at the calendar, and I think the earliest big things I wanted to see were the inflation reports, okay? So part of remember I shared 2 major concerns. One is exploding rates. Number 2 is, actually number 1 is the tariff. Number 2 is the exploding rates. I'm more concerned about the tariffs than the rates. So I'm going to go to 5 years. Nope, that's still, yeah. So I'm showing you that the reason why I say exploding rates, if this white line area is breached with force, we're at it right now. I think 3.5 will come in the blink of an eye on the 10-year. If we freaked out over 3, we're going to freak out over 3.5. But then the buzzword is how fast we'll get there. That's what everybody on CNBC is worried about. It won't make a difference as to how many iPhones we're going to sell between 3 or 3.5. But sentiment will switch back to, oh my gosh. Okay, so if I go to, this is how rates are from 1993 or 4. I'm pretty sure we had up years in the S&P up here when rates were 7 or 8 or 9 or 10. Okay, so it's not a death to all stocks. It just becomes competition between stocks and rates. I can put my money in the bank and get 3%, or I can risk my money and get 8%. Or 10% or whatever. So that's the decision people make. So I recently said, okay, let's go short bonds by going long the TBT or short the TLT. I'm going to share in writing for members as to what I did with my position on those 2. They were good positions. So what happens from here is up to headlines. The dollar, I also shared a recent setup and trade. It's clunking around. It is tracing exactly the way we expected it. Inverse head and shoulders, and it's a technical trade. I booked mine way too early, but hey, kudos to whoever stayed in it. It's still playing out right. Gold, tough trade against an exploding dollar, so big gap down here. Maybe it's finding footing today, maybe not. Depends. I'm not trading it at this point. All right, so again, going into the Friday close, it looks scary, but even the VIX is up mildly today, so it's not taking advantage of this cloud that's looming above us from the headline of tariffs. I tell you one thing, though. We will fall if we get really bad news from that. We will fall with continuation if the bad news is emphatic. Like, I know we have a deadline in the next couple of weeks from the U.S. White House to actually come out and say, okay, now the comment period on those $150 billion that Trump announced is done, and now we have to act on it, and how much. So if they act on it to the tune of $150 billion, the market will correct. That's my opinion. But if we get a headline that, hey, things didn't go so well, we will dip, but we will find footing. So it's not a death to the whole situation. If we don't get anything, I think we move higher. If we get something good, we move really higher. And if we get a good decision from the White House saying, it's going to be $50 billion, we might meander higher. I don't think it'll be a relief pop saying, okay, it's not $150 billion, but then we will meander higher because we will think about it. Wait a minute, we started a war, okay, tariff war. All right, so Nick signing out. If you have any questions, let me know.